Okay, so Prof, today we are going to do more of trying to catch up with some of the core points in business risks and insurance in preparation for our test on Friday, God willing. Okay, so we'll do that and then finally conclude on the last two subtopics, i.e. the importance of insurance and then the limitations or some of the challenges with insurance. Yes, somebody has, yes, Augustine, let's hear you.
Sir, please, good morning.
Good morning.
Sir, please, you said Friday we have the test.
Is it supposed to be Thursday?
Yes, sir.
Okay, so Thursday for BMA and then Friday for accounting. Yeah, thanks for that. Okay, well noted. For those who are not here, I indicated that we are writing our test. It's going to be multiple choice. I'll try to give you 50. 30 of them are very friendly. The 20 you have to apply some, deep thinking, right? And promise me you are not going to use AI. I'm begging you in the name of the Father, the Son, and the Holy Spirit. No AI. Use your own understanding, okay? Score the points so that you can be proud of it. When you use AI, sometimes you don't even get proud of your score, okay? And that in a way does not motivate you to learn. Okay, use your own effort so that when you get 35, 40, 45 over 50, you know that, this one is me, that I did it, me. There is self-satisfaction in that, okay? Great. So I think you did so well with the presentation. You spoke to me about all the principles of insurance and then the types of insurance. I think I kickstarted the conversation by explaining the meaning of risk, business risk, the types of risks. So I'm just quickly going to run through. So we saw that, but I'm doing it alongside your learner manual so that you'd also be so comfortable with your learning material, right? So, sorry for that. A business risk is a possible threat to a business that can have a significant impact on an organization's financial performance, growth, and long-term sustainability. So this is what your manual is saying, that a business risk is a possible threat. Okay, so a threat is something or an event that can cause harm or loss. So you can replace this by saying a business risk is any uncertain or unforeseen event that can harm or cause losses to a business to the extent of, having a significant impact on the organization's financial performance, growth, and long-term sustainability. Okay. So the point was about it is important that we know some of these threats or these events that can harm or can affect the performance and growth of the business. Okay. So we saw the types of risk. Market risk. Okay, so market risk is looking at the changes in market condition, and I gave you some of the factors in the market, like the prices, the demand and supply factors, shifting distribution channels, okay, anything related with the market, the demand, supply, exchange issues has to do with market risks. Okay, so even your competitors, right, they are all in the market. Credit risk, we saw that some businesses, give out credit to customers and then the customers fail to, settle or they default and it can affect the business, okay, negatively. Operational risk, looking at how operations of the business may cause harm to the business. Strategic risk, we saw compliance, cybersecurity, environmental risks, and then political and reputational risks. Then we went to look at, or we appreciated how to manage risk. I think I spoke in detail about diversification, risk avoidance, risk mitigation, and then insurance. Of course, insurance was the one that we took and explored further, right? But diversification here means you look into a range of products or service to reduce dependence on a single revenue stream. So if you are diversifying, what it means is that you are doing more than one thing, or you are pursuing more than one goal or objective, right? So that if one goal is failing, the others can complement or can cushion whatever losses may come from that one goal, right? So if you're an investor, for example, it is advisable that you diversify your investment. So instead of investing only treasury bills, you can also look into buying of shares, acquiring properties. Okay. So when there are issues with your shares, at least you have your properties and then your treasury bill to cushion you. So that's the essence of diversification. Don't put all your eggs in one basket, as they say, right? Try and distribute them in right proportions, and in the end, if anything should happen, at least you can salvage something. Okay, then risk avoidance has to do with you totally eliminating any activity that can cause a harm or a loss to the business. Okay, so I think I gave an example. Risk avoidance, example, risk avoidance. Professors, I think you can help me. Any example of an activity or a strategy that, speaks more about risk avoidance? The business is trying to avoid that risk. Oh, tell me something. Okay, let me give one. You see, some schools are day schools, purely day schools. They don't do boarding, right? So by mere virtue of eliminating boarding house, they are trying to avoid all the risk associated with boarding school system. You get a point. So risk avoidance means you don't want to get involved in that activity or event. So let's say you are what do you call it? I gave a school. Let's look into some realistic businesses. Like a block factory. What can be a risk avoidance? A risk avoidance strategy may be that you don't manufacture blocks during the rainy season, right? You want to totally avoid the issue where rains will come and destroy whatever concrete you are mixing. Or if you're a contractor who is building, you avoid to build in the rainy season. That is risk avoidance, right? But risk mitigation is when you don't totally eliminate or avoid a thing. No. You pursue it, but you put in, safeguards or controls to reduce any, what do you call it, harm, the magnitude of the harm that may occur. So in the examples that I gave for the boarding school system, a school that wants to mitigate against all the risk of boarding house system will run the boarding house system, but they will put in all the necessary controls. So maybe they will build walls around the school. They would employ more security men, okay, just to control any risk or any harm that may be associated with what boarding house, right? Keeping people's children can be very, difficult. People can come and kidnap their children. Okay, the children can run away, like the way some students have been breaking bounds. If anything happens, parents will come and chastise the school management, okay, for negligence. So to avoid some of these things, some schools says, I will not do the boarding house at all. That's risk avoidance. But those that are doing it would now use the risk mitigation. So they will put in internal measures. They will employ house masters. They would build walls. They will even install CCTV cameras, right? Some people can relate, but I won't talk about it. Let's continue. Now, we have the internal control, strong internal controls So when you enter some companies, the kind of rigorous controls you have to follow, it's all because they want to manage what risk, especially the banks. Before they pay a certain check, okay, you first go to the teller. The teller will check your bank account. If everything is okay, you tell you go and see one lady or one man before one corner there to also verify. All these are internal control systems to ensure that we manage risk. Okay. So those are the bits that we saw about managing risks. So your manual gives some case study here. I think we'll read it together and try to brainstorm and look at some of these issues there. So who is going to read for me? Is it going to be Portia or Prof. Na or Zoe or Eugenia? Bridget is not in class. Bridget, I hope her sore throat is not giving her issues. So who is going to read for me? Okay, Prof. Na, let's see.
Activity 3.2 Business risks, its types, and how to manage it. 1. Organize yourselves into groups of not more than 5. In your groups, analyze the scenario below and answer the questions that follow. MFS Jewelry is a business located in Nyame Petre and owned by Ms. Ekua Enoniam. MFS is known for the quality and affordability of its jewelry. However, the owner is worried about possible risks affecting her business. One evening, a fire breaks out in the shop due to an electrical fault. The fire damages the jewelry, equipment, and disrupts operations. Meanwhile, a competitor, BU Jewelry, is offering discounts to the customers of MFS.
Okay.
As a business consultant.
Okay, so I think I'll continue with the question. Thank you for that reading. I appreciate it. So as you read the case, so this is a business in the jewelry, jewelry. Some people say jewelry. Anyway, please, how do you pronounce it? It's what? Jewelry. Today, I don't know. I'm in the mood of, at least smiling small because life is too stressful. Okay, so MFF Jewelry is a business. So this business is having some issues, right? We are being told that the owner is worried about possible risks affecting her business. And unfortunately, one evening, a fire breaks out in the shop due to an electrical fault. The fire damages the jewelry, equipment, and disrupts operations. Meanwhile, a competitor, BU Jewel, is offering discount to the customers of MFS. And we are being asked, as a business consultant, identify and analyze the risks faced by MFS. So as you read here, and you have appreciated the types of risk, from market risk to strategy to operational to environmental, political compliance. Okay. What do you see here? What type of risk are you seeing here in this particular one? Are you seeing political risk? I'm not sure. There's no political risk here, right? So what do you see? Yes, Prof. Ethan. Yes, Prof, you can go ahead. Unmute your microphone and then talk to. Hey, Prof, you have raised your hand, so but your microphone is muted.
Yeah, please, your line keeps cutting off.
Sorry, take the point again.
So please, I said your line keeps cutting off. I don't know if it's only me experiencing it.
Oh, sorry. Can you hear me now?
Yes, like it goes on and off. Sometimes it comes or sometimes it doesn't.
Oh, sorry about. Please, is it the same for all of you, or only Ethan is having that challenge?
I'm also experiencing it.
Yes.
Oh. Sorry about that. These are all the the nicks and kicks of online. But I hope it's better now, though. Is it better?
Yes, please.
Okay.
Yes.
Sir.
Good. So we have looked at this case study or the case, and I wanted us to start discussing some of the risks you see in this case. We are being asked to identify and analyze the risks faced by MFS. So I was saying that based on the risk that we've looked at, are you seeing a market risk? Are you seeing a political risk? Are you seeing a compliance risk? What type of risk are you seeing here? Who will take the first bite? I'm waiting for my professors. If you look at the case here, what type of risk are you seeing? Yes, Augustine Akoli.
Sir, please, operational risk.
So, Augustine is saying he's seeing operational risk. Okay, let's note that down. Prof, now what are you seeing?
Please, I'm also seeing operational risks.
Okay, so now it's also seeing operational risks. Any different thoughts? Anything different from operational? Yes, Selikem.
Financial.
Financial risks. Okay. There is a main one you have not bringing up. One, in fact, that is the fundamental, the basic. Yes, Selikem.
So please, is it fire risk?
Not the fire. Josephine, not the fire.
Please, environmental risk.
Environmental risk. Is the fire a natural disaster or something? Anyway, so the one I was talking about is the market risks, right? The market risk. In fact, that is what I fundamentally see here. That, but of course, the operational risk, the financial risk that you mentioned are all correct. These are all risks that MFS is facing because, one of the outcomes of this fire outbreak will be that, and as it's in the case, it disrupts what? Operations. So if your operations are going to suffer, then it means that is an operational risk. And then the bit about financial risk, we are seeing that damages to jewelry and then equipment. So it's the business financial resources are also getting what, destroyed. So we are suffering some financial, risk as well. And then so the market risk I brought in is the fact that the competitor is offering discount to the customers of MFS. So what is happening in the market? Competitors are taking over, right? So because he has competitors, he has that market risk where probably, and in fact, not probably, all his customers are now shifting to a different store. Okay, so all that you mentioned was correct. I just needed you to add on the market risk to better explain the competition that B usually is given MF as well, right? Okay. So that is that. So I hope you would be able to explain the point as you have been able to identify. Okay, so B, recommend strategies to manage the risk. Recommend the strategies to manage the risk faced by MFS. Yes. So here the strategies will be what we discussed under. Yes, Ethan, you want to add something? Okay, I think that was. So it will be you listing some of the strategies to manage risk, and one of them will be to do insurance. So MFG can insure the shop, right? They can also put in risk mitigation, measures. So they could have installed fire extinguishers so that when the fire broke out, at least, the fire could have been, or they could have installed fire alarms so that even when they were not around, at least the fire alarm would have blown for attention, right? And that is risk mitigation. Okay. And then they could have avoided that. Is it due to an electrical fault? They could have avoided this risk by making sure that all faults were repaired. Okay. And of course, strong internal controls too would have helped if they were really checking their control systems. They would have realized that, hey, there's an electrical fault here, and quickly they would have solved it. So it seems MFS had a weak control system. Okay, people were not checking on certain things. Because a strong control system is one that on daily basis we check all the systems of the company, including possible faults and maintenance of machines, right? Okay. So that is this about this case study. Then you are being asked to do the following: explain the term business risk, summarize the types, explain the concept, discuss 4 ways of managing risk. Okay. So we took insurance, right? And then we explained insurance, and I hope now you appreciate the meaning of insurance. So it's a contract. It's a contract. In your manual, it says it's a financial protection plan. It's a financial protection plan between an individual or organization, the insured, and an insurance company, the insurer. So take note of these terms: insured, insurer. You should know who these parties are. And then the insured pays a regular amount, and this regular amount is called what? Premium. Okay. In exchange for the insurer's promise to compensate them for specific financial losses. I think last time I gave you a more concise definition, right? And then the principles, we saw utmost good faith, insurable interest, indemnity, proximate cause, subrogation, contribution, right? I think your manual has on another one, which is loss minimization or mitigation, and it says that principle expects that the insured at least will take reasonable steps to minimize the loss or damage. So for example, if you have insured your building against fire and then it catches fire, this principle says at least do something to reduce the damage. So you can go for fire extinguishers. Don't say because you have insured it, you sit and watch the thing burn so that you go and claim compensation. So that was our principle, right? Okay, so I don't know if any of you would want more explanations on the principle. Subrogation, proximate cause, indemnity, insurable interest, contribution, and then what have I forgotten? Utmost good faith. If you want further explanations, you can ask us to do that. If not, then we'll look at the types. Okay, there's another case here. Okay, I think we can look at this case. It's interesting, right? Activity 3.5. Okay, now read the first one. So a male or a gentleman should do the second one for us. Let me see the gentleman here, the gentleman. Prof. Kujo, can you do the reading for me?
Yes, sir.
Okay.
In pace, read the case below. Mr. Amwa Frimpong is married with 3 children and is troubled about securing the family's financial future. Mr. Amwa Frimpong's friend recently passed away due to short illness, leaving his family with major financial burdens. This urged Mr. Amwa Frimpong to consider insurance options. As an insurance consultant, help Mr. Amwa Frimpong to understand the following. A, the concept of insurance. B, the principle of insurance and how it can affect the financial insurance decision he wants to take. 2, present the answer in a book to your teacher for feedback.
Okay. So this is more of a straightforward case where you are being asked to help Mr. Amwa Frimpong to understand the concept of insurance. So what it means here is that you have to explain insurance to Mr. Amwa Frimpong, right? So in doing so, you can explain or define insurance, and then you can point out things like Mr. Amwa Frimpong should acknowledge that he is the insured and the company that he or she is going to have that contract with will be the insurer, and then he's going to pay regular amounts called what premiums. You can do something like that on the part of the A. Now the B, you also to help him understand the principles of insurance and how it can affect the financial insurance decision he wants to take. So this again means you have to explain the principles to him, but you make it more relatable to Mr. Amwa Frimpong, right? That he wants to. So what does he actually want to do? He wants to do what? He's married with 3 children and is troubled. So he wants to consider insurance options. So, well, so the principle of proximate cause, contribution. So you can educate him on all these things, right? Okay. So it's more or less like explaining the principles of insurance to Mr. Okay. I'm not Frimpong, but the features mentioned here, I think I share it. Okay. Then the types of insurance. So I think here I'll take my time for us to go through the last time. The other group did well, but let's appreciate what is stipulated in the manual. So if you can see the picture on the screen here, your manual categorizes insurance into 1, 2, 3, 4, 5, 6. So we have health insurance, we have property insurance, we have automobile insurance, travel insurance, business insurance, and then life assurance, as it is expected to be stated, life assurance. Okay. So they pick the first one, life assurance. They say it's a type of insurance that provides a financial benefit to a designated beneficiary upon the death of the insured person. It serves as a financial protection for the insured person's family or dependent in the event of their death. It helps ensure that loved ones are financially supported after the insured's passing. Key policies under life insurance are, so life assurance means that, you see, if, for example, Mr. Amwa, I'm going for this type of insurance, what it means is that I'll enter into the agreement with the company that if I die, and I know I'm not dying now, I'll die. In fact, I'll reach an age where I'll beg God to kill me because I'll be tired of this. So if I go for this type of insurance, what it means is I'll be paying regular amounts to the company so that when I die, the person I would name in the policy, so it can be my wife, it can be my children, or both of them, those are going to benefit. So whatever amount was agreed upon will be paid to them when I die. That is why some people don't like this type of insurance, because when, like they say, when people get to know that when you die, they will benefit, they will kill you. Have you heard of such stories? Where people have, yes, people have killed people because of insurance. I think it happens more in the European countries. Africa, there, you know, we are not even interested in this insurance thing. But in Europe, you hear stories of, oh, this person is dead, their wife killed him because there's some insurance package, a whole lot. Sometimes they are not true. Okay, why would you kill your husband, or why would you kill your wife for an insurance, package? Oh, it doesn't make sense at all. Okay, well, you cannot trust human being like that. So let's all be careful. Even if you marry or you're a wife and you have insurance of this nature, maybe best you shouldn't tell your spouse, but anything can happen. Keep it as a secret. When you die and the person receives the money, fine. If you go and tell him, oh, I have gone to insure my life, so when I die, you will get 3 million Ghana cedis, and you are alive and the person is struggling to even get 50 cedis to go to the salon, she'll kill you. The ladies here, I hope you not be that type of a wife. Your husband is alive, you are not getting anything better. When he dies, you get 3 million Ghana cedis. Would you kill him or not? The gentleman, if it happens that it is you, your wife has some insurance. If she dies, you get 3 million. Would you kill her?
No.
I'm happy with the no. If any of you said yes, said yes, I would have come to your home and kill you myself. Anyway, so that is it. So that is about life assurance. But we have several policies under life assurance, right? But even though I know you not do it, like I've cautioned, some of these things, keep them as a secret. Okay, let them get to know when you are no more. Okay, because anything can happen. Okay, so term life insurance, right? Term life. So this means that the term there means that there is a duration. Okay, like the way in the past we used to do first term, second term, it means there is a specific period or duration. So term life here means that the insurance policy has a definite time period. Okay. So as you see in your manual, it says provide a coverage for a specified term or a specified period. So it could be 10 years, it could be 20, it could be 30 or 5 years. So in this type of life assurance, if the person dies within that specified time, then the beneficiary receives the benefit. Okay. And they are saying it's more, affordable than the permanent life insurance, which is the whole life. So the whole life, that one, it doesn't have, it doesn't have a specified term like 5 years, 10 years. It is until the person dies. Okay, so we cannot state the specified period. Okay, and then the premium payment is a bit expensive than the term life, and sometimes they increase at certain rates annually, right? Okay, but it says that it combines a death benefit with a savings component. Okay, and it offers a lifelong coverage with a fixed premium and a cash value component that grows over time. Okay, so that's the whole life. The difference with that and the term life is the specified period. Okay, so if you go into any life assurance contract and there is a specified time, 10 years, 20 years, then that's term life. But if there's no specified duration, that is a whole life insurance. Okay. Endowment policies. No, so these policies pay out a lump sum after a specified term or upon the policyholder's death. So I'm saying this, last time I said that this is more or less like a combination of the term life and whole life. So for the endowment, as you pay the premium, there is a specified time where if you are not dead, they will pay you something, some lump sum out of it. Okay. Or when eventually you pass on, they will also pay that lump sum to you. Okay, so it's whichever comes first. They are often used as a saving vehicle for future financial goals. So if the specified term expires and you are not dead, you receive the lump sum. Or if you even die before the specified term, you still receive the lump sum. That's the endowment policy. Okay. So that's the first type. The second one is the health insurance. And I think we all appreciate this health insurance. But I don't know, your teacher, this one is bad, but let me share. I know I'm recording the lesson, but I need to share. You know that since the onset of this National Health Insurance Scheme, I've never registered. Can you imagine? Is it good or bad? Tell me. I'm your teacher. Tell me, is it good or bad? August, I won't give you that opportunity. You want to use that opportunity to talk your mind. I'll let you. I'll call the ladies. Daniela, do you think it's good that I don't have National Health Insurance coverage? Because I'm your teacher, you won't say that I said that one is bad. But I hope each and every one of you here has. Ethan, Ethan, you want to tell me your peace of mind?
No.
Okay. But I don't know. I think I have a strong belief that I don't need it because God has been so merciful. But that is a bad thinking. I need to get one for myself. So if you are here, yes, I need to get one. So I think by the close of this year, in fact, on my birthday, I'll go and do it. Okay. But interestingly, I've never been to the hospital so critically ill. And I'm thankful for that. I'm thankful to God for that. But if you are here and you don't have it, don't be like Mr. Amma, go and do it. If your parents don't have, get them to have it. Okay. I think now they are improving the system. First, it's used to be, even when you have the insurance, they will still ask you to pay some things that the insurance covers. These were all not motivating me, but I think I have to do it. It's a necessary. Okay, so it says that it's a type of insurance that pays for medical and surgical expenses incurred by the insured individual. So it covers various medical costs, including hospitalization, doctor visits, surgeries, etc. Okay. Other health insurance plan provides coverage for mental health services and treatment of substance abuse disorders. Okay. Some of the policies under health insurance include the following. So let's get to see them. So we have the individual, we have the group, and then the national health. So the national health was what I'm talking about. So the individual is where you go for an exclusive one for yourself, right? So just you, the individual. And then group, you can have a company insuring all the employees of the company, right? To group, or maybe some associations, they go and insure all their members. That is group. And then the national health, is for the whole nation, right? So every citizen is insured. Or yes. So that's about health insurance. Property insurance, your property. So you can insure your calculator. Go and insure your calculator against theft. So that when your colleagues who are very bad, when they steal it, you can get a compensation. But I don't know for a fact if an insurance company is willing to insure a calculator. Okay, so property is a type of insurance that provides financial reimbursement to the owner or renter of a structure. Pay attention here. Reimbursement to the owner or renter of a structure. So this explains the insurable interest. Sometimes you might not be the true owner, but you are renting the place, and for that matter, you have an interest in there, right? So the owner or renter of a structure and its contents in the event of damage or theft. The insurance protects the physical structure, including the home and attached structures like porch, garage. It also covers personal belongings inside the property, such as furniture, appliances, clothing, electronics. So examples of property insurance, we have homeowners insurance and then renters insurance. Okay. So the homeowner is that covers the true owner of the building or the property. Okay. And then the renters insurance will take out of the tenants, okay, in case anything should happen. Okay. Then we come to the automobile, right? The motor insurance. So it's a type of insurance that provides financial protection against physical damage or bodily injury resulting from traffic collisions and other incidents involving vehicles. Okay. Yeah. So I think last time I mentioned the two, the third party and the comprehensive. Okay. So it says that the third party, the policy covers damages and injuries caused to third parties in an accident. It does not cover the policyholder's vehicle. Okay, so it's just the third parties. As for the vehicle, they won't mind you. And sometimes even the driver. Yeah, they'll take care of the outsiders, the third parties who got, affected. Maybe the passengers. Okay. To some extent, it may cover the driver, but the comprehensive will do that job, covers everything, including the car, everyone. So I think they gave some pictures to give you. Well, the fifth one is business insurance. Business. So a business insurance is very broad, right? So these are insurances for businesses, as in institutions, organizations that are providing services or providing products, right? So we can have the general liability insurance. Okay, some of them do this insurance so that if any liability occurs, the insurance company will push in them. And most of the loan companies, normal loans, they go for these types of insurance so that if their debtors do not pay, so every loan that you go and take, there is an insurance component as part of your repayment. Okay. So general liability insurance, and then we have the property insurance. Companies can insure their properties as well. They also have the commercial auto insurance, which is related to, automobiles or vehicles, right? And then you have workers' compensation insurance. Workers' compensation insurance. This form of insurance is used to cater for any medical expense, or maybe sometimes workers will be injured in the workplace and the company has to pay for hospital bills, etc. They can have some of these compensation insurance for their workers. Okay, then we have cyber security insurance, so where a business is looking to manage the risk of cyber attacks, right? And then professional liability insurance. So this professional liability insurance has to do with issues about compliance and legal regulations. Okay. Yes, you see, sometimes you are there and then Environmental Protection Agency, they'll bring some suit against you that you haven't renewed your license. And then you are taken to court. You don't know the kind of expenses you are going to pay for that court proceedings. So some companies insure against these things. Anytime they have legal suits, the insurance company will come into pushing them with some of the expenses they will pay. Okay, so I think these were the last one is the travel insurance. Yes, if you want to travel, you have to have or you have to get insurance. So we have single trip insurance and multiple trip. Of course, I think they're self-explanatory. Single trip. So you are going for a particular, just one-off trip. Maybe you are going to Dubai. Then you go for this single trip insurance. But if it is multiple, it means that you are somebody who frequents, going up and down like that. Okay, so that's with the essence of single trip and multiple trip. So if anything happens on the journey, the insurance company would compensate you. Okay, so these were the so we can now begin to appreciate some of this. Key component of an insurance policy, and we need to know these things, right? So we have some, let me see the number in total, it's like 10 terms. Then I think after that, we'll do the is it importance? Let me check on that. Then we come back. Yes, the importance and challenges of insurance. And I think that one, when you read, you can understand. So importance, peace of mind, risk management, encourages savings, legal requirement. That's insurance in a way helps you to, helps you to abide by certain legal statute, because there are some type of businesses you need insurance, like the transport business. You cannot be doing transport business and not have insurance for your vehicle. So doing insurance in that regard will help you meet all legal requirements for that business. Okay. And then, so these are some of the importance. Then the challenges, the cost of premium, coverage exclusions and limitations, complexity of policies. Some of the policies are so complex, you don't even understand it. Something happens, you want to go for compensation, they will tell you, because there was this clause here, you didn't read. Okay, then delayed payout. Sometimes you don't pay the compensation early, right? So I think you'll be comfortable with the importance and limitations, but let me know if you face any challenges. So let's go back to the terms in the insurance policy. We already know some of the terms, like the premium, right, as a regular payment made by the insured to the insurer. But let's get some other terms. So there are 10 of them. I think each one of you pick one, right? So you read, and then if you can explain to us, if not, we will explain together. Okay, so the first one, who is doing it? The first one. Okay, let me go according to the Zoom attendant. So Prof. Daniela, read the first one for us. The key component of insurance policies.
Yeah, okay, so policyholder information. Details of the person or entity purchasing the insurance, including name, address, and contact information.
Okay, thank you very much. So it means that if you pick any insurance policy document, you find the information about the policy holder, at least the name of the person. If it's a business, the name of the business who is coming to buy the insurance from the insurance company. So policy holder information or the insured information. Okay, the information about the insured. So I think this one is number 2, Augustine Akoli.
Sir, please, insurance information.
Mm-hmm.
The details of the insurance company providing the coverage.
Yes. So again, when you pick the policy, you find the details about the company, the insurance company. At least you see their name, their logo, their vision and mission, right? It's in there. So you have both the insurer information and then the insured, who is the policyholder information, right? Okay. Number 3, Portia. Lady Portia, Prof. Portia, are you there? Okay, I think I'll go to Emmanuel Kujo. Prof. Kujo, number 3. Your microphone is muted, so unmute it.
Say,
Yes.
this question 3.
Yes.
Point 3.
Yes.
Coverage details. A deception of the risk covered by the policy, including the scope and limits of coverage.
Okay, so I think I need to do insurance for pronunciation for, I don't know whether, did you all hear him say average detail? Prof. Kujo, we have to do insurance for that. I think you saw wrongly, right? Oh, I think
serious.
yes, but you got it in the second time coverage, but in the first time, I think a primacy effect, right? So don't worry, I'll do insurance for your eye, but I hope you don't have any eye problem though.
Say please no.
It sometimes happens. Sometimes I'm reading something, and by the time I realize a particular word I'm mentioning is like, I think it does happen when your brain is faster than your eye, right? And it happens to good students. Sometimes when they are reading, the brain is very sharp, so it moves ahead of the eye. Okay, so as he mentioned, coverage details. So the coverage details talk about the risk, the particular risk, the description of the risk the policy is going to cover. So is it fire? Is it theft? And even the fire and theft explanation, detailed explanation is given. What type of theft? Is it that the car was well parked in a garage and somebody came to steal it? Or you went to park it anywhere, you didn't lock the gates and somebody goes to steal it? So all those details are given on the risk to be covered. Right, so that's the coverage detail. Thank you. I think Portia indicated that in the chat. I think microphone or something. Okay, Prof. Ethan, number 4.
The premium.
Premium, okay.
The amount the policyholder must pay for the insurance coverage, including payment frequency.
Okay.
Into brackets, example, monthly or annually.
Yes. So the premium talks about how much you are supposed to pay, whether monthly or annual. Most of the insurance company, I think they take the monthly premium payment, right? Okay. And then we go to the next one, which is number 5, Prof. Josephine.
Number 5, deductible. The amount the policyholder must pay out of pocket before the insurer pays for a covered claim.
Okay. So do you understand this deductible? Hey, I wanted to brush like deductible. So can you explain further, Josephine? What does it mean?
Okay, so I understand it as before you can get insured, the policy holder must pay an amount of money before the insurer can then go ahead to say they've insured you or they've given you insurance.
Oh, okay. Any other idea? Okay, so in current terms, some people go for insurance, policies, and then in the policy, you see, especially with the term specified insurance, maybe you are doing it for 5 years or 10 years. So maybe monthly you are supposed to pay 20 cedis. So you can be able to calculate how much premium you pay before the insurance company can also compensate you, right? So the deductible is looking at the total amount the policy holder. So you see, Ethan, was it Ethan? No, Kujo. What happened to you? Some has happened to me. Instead of policy, I say CPOL. So, so you can tell how much in total the insured is supposed to pay under the contract. So, like the example I gave, if the insurance is for 5 years, right, and then I'm paying 20 cedis a month. So a year, 20 cedis a month times 12 months, that's 240 times 5. So you can be able to tell the total amount I must pay before the insurance company can pay me for whatever claim that is due. That's the deductible. So if there are any outstanding arrears, if you haven't paid some premiums, sometimes they will deduct it before they pay you your final pay. Okay. That is why the word deductible comes in there. The amount you must pay. So you haven't paid it, you have to pay. So if you haven't paid, then they can deduct it from your lump sum of the money they are going to use to compensate you. In fact, in some policies, their terms are so strict that when you default payment for a month or two, the contract is terminated. But some companies now, they allow. So even when you miss some of the premium payments, they'll wait till the final period when they have to compensate you. Then they'll deduct those amounts you must pay, which you haven't paid. Okay. Number 6, Prof. Now, number 6.
Policy term, the duration of the coverage, specifying end dates.
Okay, so that's the policy term. So this is more feasible for insurances that have a defined time period. Something like the whole life, you cannot have a policy term because you don't know when the person will die. So you can't put for a fact that it's going to last for 10 years or 20 years or whatever. So this is more feasible in the policies that have a defined term, like 10 years, 20 years, 50 years, etc. Okay, number 7, Prof. Rebecca. Prof. Rebecca.
Exclusions. A list of risks or events not covered by the policy.
Wow. I love the way Prof. Rebecca, lights out the voice. A list of risks or events not covered by the policy. So yes, that's exclusions. So that if it happens, you don't come and claim anything. They have. So even if it is theft, they can tell you the nature of theft cases they are not going to include under the policy. Okay. So something like imagine you will insure your car against theft, and then the next moment you come and tell the insurance company that your wife has stolen the car. It doesn't even make sense. How can your wife steal your car or your husband steal your car? this kind of theft is not something you have to worry ahead about. Okay. So they will include exclusions, things that you cannot claim under the policy. Yes, Augustine. You have a question, go ahead.
Sir. Sir. Sir, please, for example, like you are married, like someone is married to someone, and the wife, maybe the wife, when the person went somewhere, maybe the person has traveled, and when he came back, the wife is not there, the car is not there, the things are not there, and sources say that the wife now who have stolen it, but I can go to the insurance company to collect my claim.
Now, when you go to the insurance company and they ask you who stole the car, and you tell them your wife. Doesn't it sound funny? It's not like you have divorced the person. The person is still your wife, and you are going to tell them she has stolen your car. It wouldn't make a lot of sense to say that your wife or your husband has stolen your car. Like how? Maybe in cases where there has been divorce, and then maybe properties have been shared, and then whilst the person was living, took the car. Then maybe it will make sense. But you are still married with the person and you say the person has stolen your car. It doesn't make sense. So this may be part of You won't do what?
I don't get like you won't pay me anything. Like
it can, in fact, in law, legally, because your wife is a co-owner of your assets. So you can't tell me that the owner or the co-owner has stolen the car. How is that possible? It wouldn't make sense, because even if you registered your car in your name, right? In your absence, who is a bona fide owner of the car? It's your wife. Because when you pass on,
my mother.
Your mother. Okay, fine. Unless maybe you put in your will that the car should be given to your mom. But even at that, you see now I think social studies, they have this is a law of intestate law, right? This issue about a spouse dying and then the will, those will issues. And now the law is looking at the wife and the children more than any other, family member or whatever. Okay. But where you have explicitly stated in your will that maybe this car is for my mom, and then your wife takes it and uses, then maybe your mother can then go and claim for a theft issue, right? But when you are still married to the person, you haven't divorced, there has been no issue, no documentation to say otherwise. That's why it wouldn't make sense to go and tell the company that your wife has stolen your car. Nobody will listen to that story. Augustine, the way you are asking this question, are you envisaging that your wife will steal your car? Professor, you see,
my car.
Augustine is thinking into the future that his wife may steal his car. Anyways, that is just by the way. Okay, let's go to the next one, which is number 8, Prof. Selicum.
Claims process. Okay. Instructions on how to file a claim. Required timelines.
Okay, so yes, the policy will tell you that if the event happens, maybe you write a letter, you submit pictures, whatever, to the office. Within 1 week, it will be processed, blah, blah. So they give you all the details of how to file a claim, including, so most of the accident cases, the insurance company would first tell you to get a police report, right? So they give you instructions on how to file your claim. You then just go to them and say that, oh, my car is involved in an accident. No. You have to get a police report. You add a cover letter, you submit all that. So that's the bit about the claim process. Number 9, Prof. Eugenia. I think Prof. Eugenia is doing some online insurance. So she's insuring against microphone malfunctioning. So since she's not talking, I think we can call the insurance company for compensation because the microphone is not working. Prof. Zoe, number 9, do number 9 for us. Hello.
Hello, sir.
Yes, number 9.
Policy renewal. Information on how to renew the policy at the end of the term.
Okay. So the policy renewal. So yes, the policy will give you details about how to renew the policy at the end of the term. So if the policy is for like 5 years and you are done, the policy can go ahead to tell you when or how you can renew to continue or otherwise, right? Something like the motor insurance, it normally lasts for a year. So when it expires, the company will give you procedures that when it expires, you have to take the old sticker to the company, they pick your details, they register you and all that. Okay. Then number 10, I think I'll do the number 10, cancellation terms. Yes. So they are also going to tell you conditions under which you can terminate or you can cancel or the policy can be cancelled. Okay. And some of them may include defaulting premium payment. Okay. So when you default premium payment, it can lead to policy cancellation. So they will tell you all that. Maybe if you change the ownership of the car or if you stop using the car for the original purpose you bought it, then the contract or the insurance on that particular asset may cease. For example, you have a building, you were staying in it, so you went for an insurance. Okay, it can be included in the terms that when you change usage of the building, so if you now start to rent it out, then maybe there will be a condition in the term that, well, when you start renting your building out, the policy is automatically terminated. So they'll give you all those conditions in there. Okay. So profs, I think today we can virtually say that we have really finished this topic, business risk and insurance. I went through your learner manual with you for you to appreciate some of the things in there so that you pay attention to them. I think we've done well. So on that note, I'll ask for questions if there are any questions. If not, then we'll wrap up and prepare for our tests on Thursday. So question time, professors. Yes, Prof. Eric was saying now. Then after,
I still don't get the part about you saying if you don't use your car for the purpose you use it as stated in the contract or insurance.
Yes. So let's say you went to buy a vehicle. You were using it for private use, right? So you went for an insurance. So the terms will be that the car is for private use. Okay, so immediately in some contracts, they will tell you that when you change the use of the car to commercial, that current policy does not hold. You may have to go to renew or renegotiate the terms so that it will be captured that the vehicle is for commercial purposes. Okay, yes, some insurance companies, in fact, most of them have it. So for my car, for example, when I'm going to insure, you see, it is a Hyundai Atos, right? And it's popular with commercial purpose. It's used as a taxi, right? So the first day I went to the insurer, they asked me, "Are you using it for taxi or private use?" And I said private use. They said okay. Some even went ahead to ask, "Would you be using it for Bolt or Uber services?" They need to know all that, because if you are using it for your private use, just you and your family, the risk is minimal than when you are using it for Uber services or transport services. That is why it's important that they get to know. And these conditions are stated there. Sometimes when you change the purpose of the usage of the assets, the policy may terminate naturally. Okay. So you cannot insure your car under the terms of for private use, and then you'll be using it for public transport. If anything happen in your public transport issue, the insurance company would refuse to pay, because you were not using the car based on the purpose you stated in the contract. So Ethan, that is the issue there.
Okay, so if you want to move it to commercial, is there a fee to pay, or they instantly change what's inside the contract?
Oh yeah, sure. So you go and I think they have one for commercial. So when you go and you say, well, now I'm not using it for private purposes, for commercial purposes, then they equally update your policy to commercial, service automobile insurance, right? So yes, they do that. Okay, Prof, now let's say I didn't hear the question, Prof. Now. Yes, take it again.
Please, can an insurance company insure their company to another insurance company, or is it like they're under one big company, like the way they're under the Bank of Ghana?
Oh yes, in fact, interesting question. Very beautiful question. Yes, it's true. In fact, we call it a risk transfer. Some of the insurance company, they have also insured with other insurance company. So some company like what do you call it? Let's say Vanguard Assurance. They can have insurance company with Glyco. And it happens sometimes when, for example, the company feels that no, with the number of policies they have, if the thing should occur, they cannot pay. So they also now transfer some of the risk to other insurance company by insuring those policies with the insurance company. So it can happen that an insurance company will also get insurance from another insurance company. Yes.
Please, thank you.
Yeah. So it happens, but that was a good question. Thank you very much. So I think the technical term for it is reinsurance. Reinsurance. Okay. So sometimes when you go to let's say enterprise insurance, okay, to take an insurance, yes, they will do all the process and everything, but sometimes they transfer the risk to another insurance company. So it happens. Okay, Prof. Joseph.
Yeah, please. So I think when maybe the name of the insurance company is like there's reinsurance attached to the name, does that mean that that insurance company is trying to inform us that they've insured their company with another company?
Oh, sure. Sure. When you see reinsurance, it means that there's been some transfer of risk from that primary insurance company to another insurance company. You know, some of the insurance companies are very small, right, in terms of capacity. So when they get more clients, they also try to push some to the bigger companies because they may not be able to pay the claims when the events begin to happen. So yes, they do those reinsurance things to get themselves. So then the original insurance company becomes the primary insurer. Okay, and then the company that they transfer the insurance to becomes the reinsurer. Okay. So it happens. It happens a lot. Most of these new insurance companies, they are having their risk being managed by the bigger ones or the old insurance companies. Okay. Any further questions? But let me ask my students, as we are discussing this, how many of you have insurance? Either for your education or anything, whether it's done by your mom, your dad, or yourself. Sometimes you people, you chop money too much. You chop money. So you come for a semester, 2-3 months, and you have chopped like 3,000 Ghana cedis. You can put 100 cedis into your insurance, your education, or you can do an endowment fund. Do it. Do it for your future. How many of you have some? Okay, Portia, Augustine. Okay. Daniela. Okay. Then that's fine. Hey, majority. Please, when you get your compensation, send me some. But is it not funny when I am preaching that you do it, but I have not done so? Or I think I have few insurance around. I think I have one with Bima. I have one with GCB. Yes. Anyways, it's nice. I'm happy that my students are doing insurance. Do it, oh, it's very good. They chop money, don't spend all. Some of you chop the money left, right, center, anyhow. Put some into insurance or savings. Yeah, Augustine.
Say please, the insurance, like, is there a specific age for you to start, or you can maybe file? Is there a specific age to start?
Yes, so
Specific.
in Ghana, all legal contracts have some age limit, and that's 18 years, right? So most of the child policies are initiated by the parents. So when the child attains 18, then they can transfer to the child. Okay, so maybe now you currently cannot go to an insurance company to go and have that contract, but your parents can do for you in your name, right? Yes, Prof. Na.
Sir, please, I realized something I want to confirm. Is it like the insurance, can it also be like an investment that you're
Oh,
making,
sure.
especially with
Sure, like investment. You see the endowment policy, right? The endowment policies that we read about. Even though it's a life assurance, it's a type of life assurance policy. That one, you can be paid the lump sum when you are still alive. The endowment policy. Okay, it's only the life, the whole life that you have to die before they pay the money. Okay, but with the endowment and the term life, they will pay you the money. So, for example, the term life, if you do for 10 years and after 10 years you are still alive, you go and take your money. Okay, or endowment, you do it for some time, you go and take the money. It's the whole life that you have to die before they pay the money to the beneficiary. So me, I don't like the whole life. I'll die and then people will be enjoying my money. No. So people do the whole life, but they don't commit lots of monies into that type of policy. So, but you see, interestingly, now the real life issues is making a lot of businesses deviate from the theories, okay, or what the standards say. Even the banks, they have kiddie accounts. So small, young people can have an account. Just that the contract will be negotiated with their parents. Okay, but then the account can be in the name of the child, etc. Okay, so you need to do something. It will help you. Imagine if you started saving when you were 6 years old. By the time you get to age 36, you have money in your account. You can start doing calculation. 5 cedis a day times 365. That's like almost 1,700, 1,800 a year times 30 years. Wow, you have money. So you see that by the time you begin to do certain things in life, you want to marry, you want to acquire a plot of land, you have some lump sum in your account, briefing. But if you don't do some of these things, you have to start afresh. You are now waiting for work, salary, and all that. Okay, so think into these things. I know some of you are around 12, 15, 14 years. You can do something. By age 30, if you have like 30,000 Ghana cedis in your account, you are gone. I know some of you can do more than that. Yeah. Maybe you'll be a millionaire at age 30. So you have 100 million Ghana cedis. But don't forget to send Mr. Amwes 10%. Okay. Okay, Professor. So I think we've had a wonderful discussion today, and I hope you appreciate it. But prepare for your test on Thursday. So do have a great day. I'll see you on Thursday. Bye-bye.
Bye.
Prof. Nadom, go and do insurance. Or get Snapoli, go and do insurance. As for all the ladies, I know they have insurance. The gentlemen, they don't like insurance at all. Ethan, go and do some. Emmanuel, go and do